Rajeev Juneja, Vice Chairman and MD of Mankind Pharma, now joins in. Hi Rajeev, good morning. Thanks for joining us. Rajeev, now help us understand this. You've been in the news for all the right reasons on back of that BSV acquisition that you announced. We'll talk about the financials of what this acquisition does to you later. But first up, you had a QIP that was announced to the tune of 7,500 crores in the fourth quarter. The market was of the opinion that this 13,000 crore acquisition would be part funded by internal accruals and part funded by funds raised to the QIP. Now, of course, we believe you've also increased your credit limit by 10,000 crores. You want to tell us what is this? What are you going to do with all the funds? Is the acquisition completely going to be debt funded? Is it going to be part equity? We are slightly lost.
Thank you so much for calling me here, and let me clarify you. Right from beginning, we have always been averse to having more of debts. So what basically would happen going forward in the next few days' time or in months' time, that as a whole, out of approximately 14,000 crore rupees deal, 4,000 crore rupees would be coming from company side. The rest 10,000 is there. Out of rest 10,000, 3,000 crore rupees would be QIP. And the rest would be debt, which will be approximately the tune of EBITDA to debt ratio would be 2 times. That's the actual picture. So whatever we are taking right now, 10,000 crore rupees permission, it is till the time we go for QIP. But ultimately, QIP would be in the range of 3,000, 7,000 would be debt, 4,000 would be coming from company side. That's the actual position.
Okay, that makes complete sense, Rajeev. Now, all of this adds up. So that debt is literally just a bridge to get you from now until the QIP to fill that gap of 3,000 crores, which will be done through the QIP. Help me understand this and correct me if I'm wrong. You're paying about 13,500, 14,000 crores to acquire BSV. Is that going to be all in terms of money spent to get the ball rolling, or will there be more investments between now and say when this turns revenue accretive, for which you already have a deadline that you could dip into as and when needed?
Yeah, as of right now, this is the only investment would really happen. I cannot say going forward how much 100, 200 rupees more may be spent for correcting certain things. But all in all, it's a fantastic kind of a entity. It will add a lot of entry-value products to Mankind's kitty. We were looking for this entity from last couple of years. In 2019 as well, we tried to acquire this, but lost to Advent. So God has different kind of a planning. So we are having it now much better BSV. Position right now is what? That this would be sufficient. No more money, more would be required.
Right. Rajeev, going forward, we have all sorts of numbers when it comes to this particular acquisition and the kind of contribution it can make to your growth, your top line, as well as your overall margins. So can you give us a better idea about what you are estimating and what this acquisition can do for your consolidated numbers?
If you look at Mankind's growth has always been in the range of 1.3 to 1.4 times to IPM growth. Say approximately, in the first quarter, our growth is 12.some%. On the second side, growth-wise, BSV has better growth than ours, 15 to 20%. That's a kind of a range. Their EBITDA is more than us. Our EBITDA in the range of 25 to 6%. Their EBITDA is in the range of 28 to 30%, and going forward, this would always increase actually. So in all, what we are basically acquiring is a fantastic entity in the form of having what Mankind never had: very high entry value products, which should not be seen from the lenses of pharma side. This is a different kind of entity where products are amazing. To make these kind of products, you need a time of 5 to 10 years. At any given time, a number of their products are in almost a monopoly kind of a stage. And if any other competitor would be coming, the price does not go down, profit remains good. That's a plus side of this business.
You talked about how this debt funding is going to be a little bit of a band-aid for you through that QIP, right? But the fact remains you're still going to raise 6,000 to 7,000 crores that will be used to fund the acquisition. Now, what will that do to your finance costs? Because I'd imagine it would impact finance costs quite significantly and hence impact profitability, at least in the next couple of quarters. Is that a fair assumption?
So I can tell you that as this credit ratings have been very kind to us, they have given us a AA plus kind of rating that really talks about the health of mankind. And I cannot tell you in numbers once this stage will come to know. I mean, many other things will happen in the meanwhile. By the end of October, we'll come to know when bankers have given us some kind of a approximate kind of a percentage of interest rate they will be charging. But we feel that in next 3 years' time, hopefully, we'll be able to just pay back this debt. In the history of mankind, we have always been averse to debt, never believed in taking any kind of a debt. For the first time, we are taking debt. So we're also equally concerned that from the books of mankind, that should go away. And for that, there are some non-core business in the books of mankind. Western hotels are there. We have put those hotels on the block. And whatever money would be coming, that would be given to these banks so that earlier the better. That's our paid back.
All right. Well, Rajeev, we'll leave it at that. Thank you so much for joining us and taking us through the latest in terms of the contours of your update here. Of course, we look forward to having another conversation soon once we actually do have more of a clarity when it comes to your debt numbers eventually down the line. But thank you so much for joining us and taking us through this update.